Good afternoon. This is Michael coming to you from beautiful Scottsdale, Arizona. It's November 21st. I think it was 60 degrees last night. It's going to go up to 85 today. The skies are absolutely stunningly beautiful. They're blue and they're clear. This is the time to be here in Scottsdale. We're starting to get our Christmas decorations and the lights are around and they're shopping. I'm going to advise everybody to come here. This is just an incredible place to visit, and it's an extraordinary place to live. So my very best to you all for Thanksgiving that's coming upon us, and it'll be a great time for thanks, because we all have so much to be thankful for. I mean, we live here in this great country, and we all have these opportunities that are just abound. So we need to thank God for giving us those opportunities. Listen, here's what I see. This is going to be a short video. I've had several people kind of ask me a couple questions saying, well, look at you, the stock market continues to do so well, and why am I so worried? Well, if you recall, now you remember, here's one of the only good things about getting old is that you can remember things. And I've been through a lot of cycle downturns. I've been through business cycles that have completed and have gone into recession. I've been into stock markets that have completed and gone into decline. So let me just remind you that here we were. I mean, this is Phoenix metropolitan area. We are the poster child for bubbles, and we were a poster child for the 2005, 6, 7 bubble that in real estate that we came through. And of course, it's taken us a long time to get well, but we finally have gotten well. In that time frame, I'm going to tell you that in 2006, I had called all of my investors and said, look, at the direction of the market is down, and we need to clear some of our investments because we had made such extraordinary gains. Everybody thought that I was just churning the account and that it would never end. Well, of course, we know it does end. And the problem is when you're in the middle of these things and everything is just going exceptionally well and everything is doing really, really well, it's very, very hard. We've talked about having courage to switch and move into one and say, look, I've had extraordinary gains, I've made extraordinary profits, and I'm going to accept my profits, and I'm going to move to a different asset class, because that's what I'm asking you to do. That's very, very hard. I understand it. But let me tell you something that happened in 2008 that's going to happen now. In 2008, we had an 18-and-a-half-year real estate cycle come to an end. And it didn't complete, but started coming down in 2008. It didn't complete until 2009, and it was devastating. That was an 18-and-a-half-year cycle that had completed. And it was a strong cycle, and it completed in 2009, and it bottomed and it came up from there. People were shell shocked. People were never ever going to buy another piece of real estate in my lifetime, and of course it's taken them 5, 6, 7, 8 years to recover from that. But it wasn't the only cycle that ended. We also had an extraordinary stock market cycle also ended. So within months of each other, in 2008, I think it was. I think the stock market peaked in late December 2007, and then started down and turned down, and it came down. It preceded the stock market, but the stock market you couldn't tell people not to get out of the stock market. You just couldn't tell them. You couldn't tell people to get out of the real estate business. You couldn't talk to them. So that's what we have now. We have the stock market, which is on a 7.5-year cycle. It's running 9.5. It's a really, really long cycle. It has been enhanced and elongated by central bank interference. So it's really gone longer than it should, and probably higher than it should, and made people a lot richer than they should. So I'm telling you to take your profits. But we've also had a 30-year interest rate cycle. Now, interest rate cycles are 60 years. They're really, really, really long cycles. This cycle started right around 1981, 1982, and it's coming down. It should have ended here again. It should have ended in 2012, 2013, but we've had central bank intervention. That's when we had QE, and the central banks have just been buying up every bond, and they've been driving interest rates down. It should have ended, and now of course the central bank said we're going to stop our QE. So when you have 5,000-year low interest rates, 5,000 years. I mean, the ancient Sumerians had higher interest rates than we have here today. You have to know that there's something wrong. So we have a huge, enormous bubble in the bond market. Now, a lot of people don't realize this, but the bond market is actually bigger than the stock market by 5, 10, 15 times. I mean, it's just enormous. The bond market is just incredibly large. And most of them is denominated in dollars. So let me just tell you, if you also have the dollar get strong, which often happens during a recession, it's going to make foreign denominated bonds that are denominated in dollars become extremely expensive. And it's just going to cause trouble. So now you have two of the strongest cycles beginning to complete. So the business cycle is completing. We know that things are starting to slow down. You can see that, just one indicator that we watch is the commercial and industrial loans. Those have already turned over. We know that they've turned over. They're starting to decelerate. And once that happens, I mean, every time that has happened since we've been keeping track, it goes all the way back to the 60s. Once that's happened, recession wasn't very far behind. So we have that. But we have the bond market, which is enormous. And we have the stock market, which are enormous. Both of these are going to complete. And when I say complete, that means they've gone up and they're heading down and they're going to bottom. So, and that bottoming process is going to be very devastating, could cause great turmoil. Now, fortunate for us in the real estate business, we are midstream for a cycle. We're not going to complete our cycle till probably 2025, 26. We did complete in 2009. I don't think anyone can miss that one. And our cycles are typically about 18 and a half years. So we really have till 2026, 27, 28 before it completes again. So we have a little bit of time, so we're not too terribly. But of course, we're economically sensitive, and we do have a mid-cycle correction, one or two. We always do this in every cycle, so I wouldn't be a bit surprised if we don't correct. But I don't see us having a devastating crash. But I'm telling you that there can be some turmoil in the marketplaces, and I think it's coming reasonably soon. And if you look at, if you ever come to one of my seminars, we talk about the spikes. Always, whenever you get towards the end of the cycle, the last end of the cycle is where you get huge gains. I mean, you want to be in on the last end of the cycle because that's where they really, really go. They really, really pop. It's like 2002, 2003, 2004, homes were going up and going up really nice. But it wasn't until they got to the end of the cycle, end of 2005, where homes were just going up. We got 55% appreciation in 2005 here. 55% in 1 year. That's crazy. That's insanity. So, but that was the end of the cycle. The end of the cycle was coming, and the rest of this time it rolled over and it turned over, and it was a problem. So we're getting to the end of the cycle. So maybe we get one more downturn on interest rates for bonds, because I think the stock market will go first, but then we're going to go bonds. And I'm going to tell you, I think we're going to have some turmoil on that. So that's why I'm saying that the stock market could easily go up for a little bit more. I mean, we've got really good news. I think that with the tax reform and some of the Make America Great policies, I think that this is really good for business. But I think that we just have an awful lot of things that are in this way. I'd like to get the cycles out of our way, because I see just great things. I see the greatest bull market in my life in real estate's coming. It's not for 4 or 5 years. That's why what our strategy is to accumulate for 2023, 2024, and then we're going to start selling into our peak, because the real estate will peak, and it should. Our cycle should be peaking in 2023, 2024. So we want to sell into some of that and take some profits into that. So listen, this is my very, very best for you. Thanksgiving is just around the corner. I wish you the very, very best. I hope you and your family are together, and that you give thanks to our God Almighty for all the great things that He's given us. So my very best to you all. Bye-bye now.